Morning traders, Paul here with GammaEdge. Today is Tuesday, the 24th of January. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, market models remained long. We actually have a new, what we call railroad track up signal. We're on day one of that. We're on day two of a new cumulative tick long signal. This is on our short term. This is a daily or intraday type of timer. It does not really consider the long-term timer. Long-term timer, the cumulative tick ribbon, and you'll see this on the next screen, is now in day 5, and that's good. Maybe getting a little bit of a pullback ready coming up, and we'll talk a little bit more about that, but just be aware, green across the board, and as long as we stay in this uptrend, things will be good for the bulls. Market breadth, as we watch using our 52-week new high, new low, we continue to show a bullish broad support. We just completed the 14th trading day of this upside expansion. This is since the beginning of the new year. This is very remarkable. We have not seen this since before the February-March timeframe. So this is notable, and maybe we're going through a sentiment change, maybe not. It's hard to tell at this point. The right plus GEX goalpost has moved back up to 4,100. We discussed this yesterday in the morning call. The left goalpost remains at 3,800. So this really is the playing range right now. We are watching a short-term upside development at the 4050. That line is growing. You'll see that on the last slide here. The transition floor is not advancing upward. This is a little storm cloud on the horizon. Typically, when we see an advancement for the bulls, we like to see what we call the transition area or the transition zone move up in concert, and we are not seeing that. That means that there are some short-term puts that are out of the money, and they're very stubborn. So there is downside speculation very, very close. And if that grows, if that emboldens the bears to the downside, we'll see this transition floor remain or even start to drop, and that would be an ominous sign in the short term. 3880 is still the likely floor for the short term, despite the left goalpost being 3800. We don't think we're getting below the 3880 in this week at all. To the upside, we're looking now, we've had a little bit of expansion from yesterday. So we're looking at this 4065, 4070 area. We're bounded in part by a very large JPM short call leg, 41,600 contracts that are sitting up at that 4065 strike. They don't come off until the end of March. The only way we're going to get above that zone is by absorbing the calls there to a level that the market makers and the market can really deal with in terms of gamma and delta exposure. So we're seeing this push towards this. We think it's contentious because since we are expanding to the upside, the only two things that are holding us back right now are this 4065 and 4145, both of which are the JPM short calls, the 4145 being the end of this month, but about a third of the size of the end of March. The market model, as I said, we have this new railroad track up pattern. When we get that pattern, it's usually a good signal for entry on the long side. Here's the ribbon. You can see where we actually transitioned several days ago, and we're in an uptrend. This is very constructive for the bulls. What we're looking for here is a continuation to the upside, but if we do pull back, just like you can't see behind this little table here, but we did pull back and we held above, and historically when we get these ebbs and flows but we continue on an upward trajectory, that is a good thing, right? These are your buying opportunities for getting back in. So today is a buying opportunity. Railroad track up, could always pull back. This is not to say that we can't, but so just be aware that today is a buying opportunity, and we've done an extensive amount of testing on this. And for those of you who are in the weeds with us on this, this is scenario 10, and this is where the short-term moving averages are railroad track upward, buy on the first day of the signal. So we can go back and look at some of those testing results, look for tag combo 10, and you'll see generally they are at the top of the list or near the top of the sorted lists as being a very favorable bull entry condition. When we take a look at different strategies, we have no new signals for the zero GEX to trans entry. This is important in the context that when you have made the transition and you're already up to positive trends, there's nothing left down below. Now we're limiting the universe here to highly liquid stocks. The fact that we have none that have shown up here today on the scan gives us an indication that we might be getting a little long in the tooth, and just be aware of that. Avgo was on the list yesterday. It made that transition from 0GEX to P-trans, to P-trans, and now it's on the P-trans to plus GEX entry. It is moving up. Another key thing to look at, the SPY has entered the list here. Generally, these are very, very good signals to the upside. They are not without some drawdown capability, and they put some duration on them, so expect some heat, size accordingly. But we're liking these, and we took a number of the trades yesterday and are watching those develop here. Key levels to the upside, 4,000 was where we were yesterday. We moved up to 4,100, 38 remains. Over here in the SPX PM settled complex, we've had a little bit of a change here from 4,000 to 4050, so just be aware of that. This 4065 represents that JPM end of March leg, and you can see it's looming out there with its negative delta and negative gamma. We did get a drop in open high lows projected volatility. This is a conservative number. It's targeted towards our premium sellers, and so we think you're safe more or less above and below the numbers that you see here. PM settled complex, here's that 4060, 4065 zone to the upside. Here's that 3875, 3880. Not seeing a lot of change here. Very fat, very wide transition in the PM complex. Not overly constructive to the bulls. We're not seeing this floor push upward. When we don't see the floor push up, we get a little bit of concern that we're going to start seeing some short-term put-dominated gamma come in. That would be speculative, because remember, puts above the line are in the money, puts below the line are out of the money. And so if we start seeing more development down here where we can't neutralize this and push these numbers up, then we have a little bit of concern going here. So just be aware of what's happening. 0 DTE, a little better picture for today. This is what's coming off today. Net positive expiry, fairly good magnitude. This has jumped quite a bit from where it was yesterday. This narrowness here does suggest that we could push downward to 39.95 to 40.10. So those would be the areas that I would be watchful of for the day. A drop below 39.90 would be problematic for a number of reasons, but I don't think we're going there. You can see a very call-dominated structure. These are in-the-money calls here, out-of-the-money calls here. We're in pretty good shape. So the net positive expiry means these are coming off. When we see a lot of calls coming off, they have to get replaced. And so it'll be up to the market to continue this bullish theme into earnings and continue to push this north. Taking a look at the 1 DTE, it's kind of the same thing. A little fatter on the transition. A couple parking spots that we're looking at as potentials into the overnight. Just be aware of that. Again, that 39.95, 4,000 upper range. Here's that bottom range at 39.40, 39.45. It's pretty fat for tomorrow, so we like to see much tighter ranges here, but note net positive expiry again projected for tomorrow, just like today was projected yesterday as being a net positive. And when these calls come off, because this is tomorrow's expiry in the SPX, they have to get replaced. If we lose all of the speculation to the upside, as you can imagine, then what rears its head are puts, and those put deltas will start, you'll start seeing red start pushing downward here in the delta structure, and that is not healthy for the bulls. Taking a look at the crystal ball for the balance of the week. So today through Friday, net positive expiry. You can see the downside structure is not well defined, very narrow range. We like to see this, right? It gives us a very clean transition, 39.95, 4,000 for the week. So take this for what it's worth. If we drop below this 39.95, 4,000 strike level, sentiment most likely will change. The bears know this, and we'll start seeing a lot of the in-the-money calls start being vaporized. And as we see that, then we'll see out-of-the-money puts being added, and we'll start seeing the delta structures change here. Same thing on the combo complex, extremely fat We like to see this move up. We like to see puts solidly go in, I should say. We'd like to see the range come up here. We're not seeing that at the present time, and so that is something to be watchful of. Now, major change from yesterday. You can see, as far as the eye can see, at least as far as the page can see, we only have 2 strikes that have a negative delta or a put-dominated delta, or short, what looks like a short put. Remember, short puts, long calls, et cetera, or short calls, long puts, right? So now that we have the red here, this is the JPM 4145 and the JPM 4065. This one is the end of March. This one is the end of January. So calls have been going in. We are seeing that upside speculation. So above the yellow line, we're seeing calls get added. It's turning everything positive. That is very good. That is a type of structure where we have decreased volatility, and that is constructive overall in the overall combo complex, which is the AM and PM settled complexes added together. It is constructive to moving north. All the other things that I just spoke about notwithstanding. So we do see some cracks in the ice, but the ice is fairly thick now, and we are seeing some potential to move up. We do think, though, it's going to be hard for today to get above this 4060, 4065. We need to absorb this, but I will note the delta level that's here and the gamma level here is not very large. So it's very possible that we could see this short-term calls go in and basically start pushing this number down quite a bit, and that could actually push this either of these numbers, whether they be on the gamma side or the delta side, to the positive. So looking for that, watching for that, and if we can turn this area green, we'll have a runway even further north. Last slide, looking at the structures. Here's that 4100, changed from the 4000 strike, as I mentioned. Here's this 4050. It's really starting to grow. So this looks to be the shortest of short-term targets for the bulls. You can see that the magnitude is coming up. These could pivot back and forth depending on how we target. The 0 DTE boys and girls have been very, very active in short-term positioning, so we'll see what happens here. To the downside, no structural change. Remember, we're at that 40-20 area, which is going to be right in this zone, so we are up in the positive gamma zone. These 2 red lines that you see here are the JPMs. I didn't label them this morning. These are the JPM 4065 and 4145s, and as we get closer and closer to the end of January, this one will grow, especially if we start walking up there in terms of spot price. Transition range, you can see it's fairly ugly. This needs to get resolved. We need to see this move up. Would love to see the 3920s just vaporize and get absorbed by puts going in here, and to the upside, 3990 really begins the top of that transition. So we're looking to clean this up a little bit and use that as a spring pad going north. So that's it for today. Urge everyone to come into GammaEdge.us. When you click on the web page, go in the upper right-hand corner, click the pricing tab, and that will get you into the Discord. Follow us on Twitter, GammaEdges with an S, and then of course here on YouTube. Smash that like button if you like today's content. That gives me immediate feedback that I'm providing the content that you want to see and that you find actionable. And of course, please subscribe. Michael, myself, and Taylor are adding videos 2 to 3 a day, and certainly would want you to be aware of what we're seeing and how we apply it to our overall trading and learning. So with that, I bid you farewell. Hope to see you in the Discord. Make it a great Tuesday. Thanks, everyone.